All right, taking his cue from David Byrne and the Talking Heads, my next guest says that his U.S. strategy is the same as it ever was. Joining me now, BMO Capital Markets, their chief investment strategist, Brian Belski. All right, Brian, you know, my man, I was a little worried about you. You look like you're getting a little flimsy there for a second. So let's talk about this. You've restored your targets. You've got a bull case of 7,000, a base case of 6,700. Walk us through the decision-making process here.
Thanks, man. By the way, cool kicks, bro. I wish I had. I wish I could show you my kicks I have on right now, but I'm in a hotel room. We have maintained our bullish stance since 2008. Actually, when I first wrote my first bullish report on the stock market, published in the public domain. And I think when we published our change in April, when we went from 6,700 to 6,100, we said, discretion is a better part of valor. And what we meant by that is, when you take a look at market targets up 35% plus from where we were trading in April, we think we needed to provide a little bit more discretion with respect to what was happening in terms of what we called exogenous events coming out of Washington. Then we also said in the very same report, Charles, that we own what we own. And we're blessed and fortunate that we didn't change any of our sector picks, any of our stock picks, because in April, May, June, I think we may have just encountered one of the best quarterly performances in all of the equity portfolios that I've ever managed money in over 20 plus years, because we stuck to our guns and we own what we own. Yeah. So from our secular bull market premise remains very much in place. We came out with the call in 2009 that U.S. stocks have entered a 25-year secular bull market. We thought it was time to go back to our 6,700 target because of the signposts that we talked about in April. Number one, we do believe coming out of this that more companies are actually going to be giving guidance again, because we do believe that second quarter earnings are going to be better than everybody thinks, and that will drive companies to provide guidance. Secondly, we are seeing kind of a law of diminishing returns in terms of the rhetoric and the reaction to the rhetoric coming out of Washington, and I think that's really good as well. And then lastly, I couldn't help myself, man. I had to talk about the American exceptionalism trade being over and how that was widely exaggerated. I think it was ridiculous. I think that call was based on emotion and fear, based on their personal opinions with respect to our president and our country. And it sure hasn't worked out for those that left the American exceptionalism trade, because the U.S. has massively outperformed the last 3 or 4 months. Yeah, and we hit on that earlier in the show as well. And I've been talking about that from day one, because I just thought, you know what, it's okay to not like someone or have difference of opinion, but where we are coming from, we want to help the audience, right? When we're not always going to be right, but it's got to come from a pure place, I think. By the way, you mentioned in your note about discipline. You say target's acute, but discipline is what matters most. But what does that mean in real life? Okay. So anyway, I think what happened was he went to bend down to show me the Snickers that he had on, and so I think he's unfrozen now. So staying disciplined, Brian, what does that mean to the person watching the show? It means this. First off, as you said.
Well, he did say he was in a hotel room. I do want to say that one thing that Brian, I think, was really critical that he said, and I want everyone to pay attention to. Broadly with the markets, even though they went from 6,700 to 6,100, he kept us overweight in the hottest sectors out there, right? Communication services, financials, information technology, and those have really rocked and rolled. Let's bring him back. Brian.
Sorry about that. In life, like in investing, never let emotions and fear drive you. You have to have a discipline and a process, and our discipline and process looks at valuation, earnings, operating performance, price performance, but also the background themes, company management, CEOs, whether or not they're able to deliver. This is implicit in good old-fashioned stock picking. So when everybody bets against the consumer, you never, ever, ever bet against the United States consumer. When everyone's bearish the consumer, you go bullish. Technology is the growth engine of the world. And oh, by the way, they're the most stable earnings in the world are right here in the United States. Financials we've been bullish on. We think actually financial earnings are way too low. So you have to kind of take 2 steps back and do the work around that fundamental process of looking at valuation, earnings, and company management. And that's what's really kept us bullish.
Yeah, I know with respect to the financials, you like the big banks. Goldman Sachs is one of your names. I want to ask you about Alphabet/Google, because it feels like it's caught in this AI revolution. On one hand, it's participating. On the other hand, folks are saying it's going to crush their core business of search.
I don't think so. We've been traveling around North America talking to investors, and of course, the first thing they say is no one's ever going to use search again. I just don't believe binary type of thoughts like that. Number one. Number two, you and I are on the same vintage. When we grew up learning about stocks, we talked about some of the parts. If you take YouTube out of Google, YouTube is actually bigger than Netflix. Think about that. And so I think at the end of the day, you have to look at companies on an individual basis. I think people have been way too negative on Google. I think actually Google is showing lots of value properties, like Apple's showing lots of value properties. So we really, really like Google right here.
All right, man. I also know you like Palo Alto Networks. We're out of time, but listen, you have been, you were Mr. Bull for a long time, right? Because you stood out in the crowd when no one else had the guts or the work, whatever you want to call it, and so you're back, to where you were, but you never left. It's the same as it always was. Brian, thanks a lot, my man.
Thanks, man. Take care.
See you soon.